We will start first with a strong finish to a strong week. Stocks pushing higher again today on renewed hopes, yes, hopes, that a stimulus deal may finally be on the way. The S&P gaining 0.8% to close out its best week since early July, and the strength was pretty broad-based. Look there. You've got semiconductors, home builders, retail, healthcare, transportation stocks. All of those ETFs that track those hitting some record highs in today's session. But we are about to kick off earnings season as well. So let's pose this question to you, Steve Grasso. How are you positioned heading into a week and few weeks and maybe a couple months full of microeconomic company-specific catalysts?
So Dom, I was a little bit early to start the rotation myself into the value trade out of tech. And now when we see that the chances of a Biden win are increasing, you're starting to see a reflation trade. So you don't want to be in an inflationary environment. You don't want to be in tech. You don't want to be in tech with a Biden election because there's a regulatory risk. You're going to have an inflationary risk along here. And also, cap gains taxes are going to double. So what does that mean? You want to sell your winners now, and that's where everyone kind of crowded into tech. So you're going to want to sell them before the end of the year, and you're going to want to buy what hasn't been performing, and that's value. And for me, market went from Fed to vaccine to stimulus. Cut out all the noise. Buy the things that haven't performed because those are the things that should perform in the first quarter or so and going forward within a Biden election. Obviously, it's a leap of faith, but we've seen value outperform as of recent for the first time with any length of time in a while.
Now, Steve, let me just follow up very briefly with you. Why do you say that the likelihood of a Biden presidency increasing is good for inflationary type or reflationary type stocks?
Well, if you look at it this way, you've seen the 10-year jump. Now, obviously, we know where the chairman is on rates, but rates can move higher without the Fed. So if you've looked at the 10-year's jumped 55% on a yield basis at least since August. It's jumped 20% in the last handful of days. So when you're in tech, you don't want to be in tech in an inflationary environment because the cost of things that they're selling and the cost of things that their costs aren't the same. You want to be with them in a deflationary environment. You want to have pricing power. So pricing power comes with value stocks. Those are the ones that could raise their prices. Technology, you never raise prices. It's just the cost of goods.
All right, so there's a thought as well out there that possibly more infrastructure gets put into play. You got things like, construction aggregates, building machinery,
sure,
that sort of thing. Brian Kelly, I see you out there nodding. Is this an environment? I mean, we've talked about this kind of value rotation for a while, and every time you think you got it, it was a head fake. It lasts for like 1 or 2 weeks, and it goes right back to mega cap tech. Are we to believe this time that there is a real sustainable move towards rotating into value?
I think so. I think rotating into value and the cyclicals and the names that would do well under stimulus. I think the game changer here, what investors have to realize is that both parties now want stimulus. So Trump is saying, I want even more than the $2.2 trillion that the Democrats are saying. And the Democrats are saying $2.2 trillion. I don't think a deal gets done before the election, but that doesn't matter to the market because the market's looking 6 months ahead and the market's saying no matter who wins, we are going to have stimulus. And to your point about how that impacts the other stocks and value, you look at what the Fed did. All they did was put a bid under financial assets. So, bonds and investment grade bonds. But if you actually have fiscal stimulus, money going into people's pockets, projects being done, jobs being created, besides just on Wall Street and a couple of hedge fund guys getting richer than they already were, that is real economic activity. And that's what Wall Street's looking at. And that's why earnings don't matter as much.
All right. If earnings don't matter as much, Bonawyn, Why are we going to pay such close attention to what's happening with earnings season? We got all the big banks starting off next week. We've got a lot more catalysts. We've got a lot more commentary coming out. How important are earnings, given what BK just said?
I don't want to put words in BK's mouth, but I think what he's saying is that earnings don't matter as much vis-a-vis your normal earnings calendar, given that we have on deck stimulus and infrastructure, build out. So I think it's really a relative statement as opposed to him saying that earnings don't matter. I mean, they matter. They give you insight as to how we're emerging from what has been a historical recession and how companies are going to be positioned for what type of guidance they're going to give. I mean, I understand what the guys are saying in terms of the rotation into value. I mean, Grasso's been all over that, and it makes a lot of sense. The one caveat that I would put out there is if we are going to get a blue sweep, I would be hesitant still about the energy sector. Now, I know it's been a laggard. It's been the laggard, the poster child of laggards, but I'm still hesitant to deploy capital there because of the regulatory risk that is likely coming down the pipe if indeed we do have Biden winning the election.
All right, Mr. Mills, I come to you now because now we've got a little bit of that context. Now we've got the view from your side of things, how you would position portfolios. Is this really something that you can believe in? This idea that value will now maybe outperform on more than just a 1 or 2 week basis? And if so, what parts of value are the most intriguing to you? Is it energy, financials, beaten up retail, bricks and mortar, that sort of thing? There's a whole bunch of stuff that you can put on that shopping list.
Yeah, no question. And that's been the question of the day. And I'd like to disagree just to make things interesting a little bit. But we have been positioned in a way where our positioning is going to benefit from a rotation into value, a rotation into cyclicality. I've been a little skeptical related to the timing, thinking we were a little bit early even now. But what the market is telling you is investors are looking at the polls. They're seeing the potential for this blue wave, and then they're seeing the potential for an even larger stimulus package. So what does that mean? That means dollar negative most likely. So what have you seen since the dollar's turned? You've seen materials start to outperform. They have the highest foreign revenue exposure when looking at the S&P 500. You've seen emerging markets start to outperform. You've seen the long end of this curve start to go up a little bit. So I think that's helped the rotation into value. And then you have to assume that if we get this big stimulus package, at least near term, it's going to be a boost to the economy. So that's why I think you're seeing that move in small cap. So I think unless something changes relative to the outlook for the election, I think that's what the performance profile looks like for the next few weeks at least.
All right. So what part? If there was one industry group that you think is going to be the key to this big reflation trade, what is it going to be?
So I like materials and I like industrials. I think they're both going to benefit. So materials from the weaker dollar, I think you're already starting to see it. And then industrials, I think, are going to benefit kind of regardless of the political environment. I think you get the economic recovery. I think if you get a big infrastructure build, industrials benefit. I think even if you get this green energy push, some sort of transition in the energy grid, you're going to need big equipment, machinery. So companies like Caterpillar I like. So I would focus on those two areas.
Shepard Smith here. Thanks for watching CNBC on YouTube.